Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets today? Well, we're getting a little bit of a bounce. The Dow's up a couple hundred. NASDAQ's up about 100. Market's kind of in a wait and see mode. You see, we have that meeting with the Federal Reserve in Jackson Hole tomorrow and Friday. We'll see what comes out of that. But I think that September's just a week away. I think September's going to be just a brutal month for the stock market. September's usually a weaker month normally, but I think this September, I'd be very cautious here if you're long the market. Look, so far this year, we started out having the worst year since 1972, the worst down year. Now, in 1972, I'll be the first to admit it recovered and made it, actually went to positive territory. We'll see if that happens this year. Now, it's possible it will, but I do think that September, I think we're going to get a flush out in the market again. We've broken through the 20-day on the SPY, and the next stop is the 50-day, and if we break through the 50-day, we're going to go back and retest the lows back in June. Okay, now, they could run this market up in this last week of August. The Federal Reserve meeting Jackson Hole. Maybe something positive comes out of that, and maybe they push the market higher. I think if there is some strength, I will be selling into that marketplace. Okay, let's move on to the real estate market. Now, the real estate market is fascinating. It's changing, though. It's changing. Now, they came out with this survey. They've surveyed the people that have purchased homes in the last 2 years. Now, 70% of the buyers, 70% of the people who bought these homes, they're already having buyer's remorse. They think it was a mistake that they bought the home. They think that they paid a price that was too high. They think that they bought too quickly. Well, of course they did. Well, back then, they weren't getting appraisals done. They were waiving the right to an appraisal. They were bidding, on average, $65,000 above the list price. They weren't getting appraisals. They weren't even getting home inspections. So they don't know what's wrong with the home. Well, they're finding out now. They're finding out that their homes need some repairs. They're finding out that it needs a new roof. They're finding out that the home has problems. And they're finding out that they just flat out paid too much as the price starts to come down. Now, what's the largest purchaser of homes there is in the market? Who's the largest buyer? Well, it's the institutions. It's the Wall Street crowd. Now, Wall Street, they've been buying about 30% of homes in the last 2 years. But you know what? They're starting to have some remorse. They're starting to become actually a desperate seller. They want to get out. You see, Wall Street doesn't really like when things go down. Now, it was all fun and games when we're going up 20% a year, and we did that for 2 years, and Wall Street goes, I'm missing out on all the fun. I got to get in. I got to buy properties. And they bought properties hand over fist. They bought all they could get. Now, for example, let's just talk a little bit about Open Door. Now, Open Door, they would go into certain areas and they would target these areas, right? They'd target these areas and they'd come in and they would pay 15-20% above the asking prices just so they could get the house. And you were bidding against Open Door, right? So you were bidding against Open Door. Now, it made you buy a house that was, it was too high. Now, Open Door, they realized their mistake. They're now selling these properties, but they're not selling them for what they bought them at. No, well, they tried to raise the price. They tried to buy them above list price, and then they tried to raise the price to sell them. It did not work. I mean, the general public, they're not always the brightest, but they're just not that dumb to overpay that much. So Open Door overpaid, and then they tried to sell at a higher price, but it didn't work. So they reduced the price to where they bought them at, and they couldn't get them sold. So they had to reduce the price again, couldn't get them sold. And now they're selling them 15 to 20% below the price they paid, right? Below the price they paid. So the market they overpaid, and now they're just dumping them for anything. You see, they're more in a liquidation mindset. Now, the person that bid against Open Door and they got their house, they can't sell. They don't want to sell. They're losing all their equity. Some of their equity's already gone, 30, 40% down already. Okay, now here's my question. Should this be legal for Open Door to do? You see, they targeted areas. They targeted certain zip codes. For example, in Phoenix, Arizona, right now, Open Door has 10% of all homes that are listed in Phoenix are listed by Open Door. They're desperately trying to get out of these. But in certain zip codes, Open Door owns as much as 30% of the listings. Now, let me just give you another example. Okay, so for example, let's say Wells Fargo Bank. Let's say they wanted to make loans, and they picked a certain zip code, but they wouldn't loan in this zip code. Well, that was declared illegal. It was like redlining. They picked a good zip code, and they didn't want to sell in the bad ones. They didn't want to make loans in the bad one because they knew those people couldn't pay the loans back. So they redlined them and said, we're not going to make loans there. And this was declared illegal, called redlining. But yet, corporations can borrow money. They borrow money from the Federal Reserve at the discount rate, which right now is they raised it up to 2.5%. Now, have you ever borrowed money at this discount rate? I don't get to borrow money at that. When I go get a mortgage, it's 6%. But these people are borrowing the money at 2%. And then they're going out into certain neighborhoods, maybe your neighborhood, for example, and they're buying every home that comes on the marketplace. They're trying to corner the market, so to speak. Now, there was a couple of people, the Hunt brothers back in, the 1980s, they tried to corner the silver market, and it ended up terrible, but it raised the price up to $50, then dropped it down to $5. Well, when they tried to corner the market in your neighborhood in a certain zip code, yes, they can bid the prices up because they have billions and billions of dollars to do this with. So they bought every house there was. Now, let's say you had to live in that zip code because your children go to school in that school district and you need to buy a house in that zip code. Well, guess what? You had to overpay for that. And now you're finding out that all your equity's gone. Now, I don't know if there's going to be a class action suit against some of these institutions that have been buying properties and they've been targeting certain zip codes to buy them in and driving up the price and hurt a lot of people, hurt people that had to bid against them that overpaid, and now all their equity's wiped out. Well, maybe they have a court case. I'm not saying they do or they don't. I'm just saying that I think it's wrong what institutions are doing. But right now it's funny though, because the institutions are the ones that are losing money. Look, we had Zillow, right? Zillow came out and they bought all these houses and they lost almost $1 billion, hundreds of millions of dollars Zillow lost, and now they had to dump all the homes onto the market. Now, they didn't actually dump them onto the market. Another institution bought all the homes from Zillow, so you didn't see that. But what if one of these big institutions, they go out and they buy all the homes in your area, all the homes in the zip code, and the institution gets in trouble because they have to report their profits and losses. And maybe they get in trouble. Maybe they have bad management. Maybe the company's going to go out of business. Now, when they're the largest purchasers of homes in that area and they have to dump all the homes all at once and there's no buyer, what's that going to do to that market? It's going to crush that market. It's going to destroy that market. It's going to wipe out that market. So this is what I worry about. Now, there's companies like BlackRock. BlackRock has put together $50 billion. $50 billion. Now, they get this at very cheap money, but they're ready. They're ready to pounce on this market when it crashes, and it will crash. Now, a lot of people disagree with that. Now, maybe it only goes down 40%, and people go, Mike, it can't go down 40%. I'm calling for 50%, but maybe it only goes down 40%, right? And people will tell me all day long that could never happen. People need a place to live. Well, look, you're only going back 2 years, right? You're going back 2 years because we went up 20%. And then 20%. Can't we go back just 2 years? I know we can. I think we can even do a little bit better than that. Look, in the last 2 years, it has not been a real market. market. It's been what I would call a fake market. Look at they propped up the properties 20%. Now how'd they do this? Well, they printed $6 trillion, right? They printed the money, and that money has to go somewhere, so it goes into assets, and these institutions come in with the money and they buy the houses and they prop it up. All right, now these institutions, they were buying these houses. They were getting the money at 0% from the Federal Reserve. Now the Fed has raised that up to 2.25% now, and they're going to raise it up another up to 3% in September, and that's going to be, well, it's going to hurt the housing market's what it's going to do. But the Federal Reserve, they also been buying the mortgages to keep the mortgage rates low, but now they're saying they're not doing that anymore, and you're seeing them spike up. Well, look, this is all changing, right? And Wall Street's to blame for it. Well, the Federal Reserve in particular, but they gave the money to Wall Street and saying, boys, go out there, buy these houses. And now they got $50 billion waiting for when the house market crashes so that they can prop it up again. Well, maybe they can, maybe they can't. Look, if you're buying a home right now, you better be planning to stay in that home for at least 10 years. It may be 20 years before we see these prices again. These prices are coming in, and they're coming in relatively quickly. Now, maybe not in your area. Well, of course not in your area. Your area only goes up. But I'm telling you, if these institutions run into trouble, and they always do, companies get in trouble. Some of them are what's known as zombie companies. They shouldn't even be in business. But they get in trouble. They're going to just be dumping the homes onto the market, crashing the market. And that's what's going to cause the market to come down. And of course, they don't do this in your area, but a lot of areas, that's how the market's going to crash. It's going to be with these institutions. They're desperate. They want to sell. They have to get out. They don't want to report losing money to their shareholders, and they're going to be losing a lot of money. Sure, it was great when it was going up. They didn't want to miss out, but now it's coming down. And you know what else is coming down? It's going to come down. It's going to be the rental market. Now, when the rental market comes down, they're really going to start to lose money. Now, why is the rental market going down? Well, people just can't afford to pay rent. And I'll talk more about that in another podcast. This one's getting a little long-winded, but that's going to bring the market down even more. Look, they have a different mentality, these Wall Street companies. They just want out. They want out at any price. They don't care. They don't have that mindset that, the home seller has. When I deal with the home seller, it's usually the family home, and it's been in the family for maybe even a couple generations already, but they've lived there the last 30 years. They don't just want to liquidate this home. Oh, no, they want to get that price that Billy Bob got because they know their home's worth more than anyone else's home on their street because their home's the best. Well, corporations, they don't think like this. No, they become desperate and they just go sell. Get me out, anything. Just sell the properties and this will crash the market. And that's what scares me about having them being the largest purchaser of homes in the United States. The institutions should not be the largest purchasers of homes because they can crash the market just as easy as they can make the market rise. But it creates this volatility in the marketplace of upswings and downswings. Look, real estate used to be a stable thing. It wasn't a thing to get rich. It went up 1%, maybe 2% a year, okay, over time, right? But now with Wall Street in the game, it can go up 20, 30, 40%, and it come down just as fast, 20, 30, 40, 50%. And that's what's dangerous. It's dangerous to people that just need a home to live. It's a dangerous game they're playing, and it's going to continue for a while, I'm afraid. But right now, they're in the desperation mode. They're in the sell mode. Just look at the listings. A lot of them are from Open Door. I'm telling you, if you live in Phoenix, it's not pretty. They got 25% in some areas 30% are Open Door listings just trying to get out. Why? Because they're desperate. Anyways, if you like this stuff, give me the thumbs up. Why not? Hit that subscribe button because I want to talk to you again later in the week. We got that Jackson Hole meeting coming up. It's going to be fireworks in the stock market. It's going to be fun. Get out there and have a great Wednesday, everybody, and we'll talk again real soon. Bye-bye now.